In this video, we're going to talk about mastering chart patterns. So have you ever looked at certain patterns that just comes again and again and again and thinking, how do I make money out of this? So here we will talk about what is a chart pattern. Chart patterns are some kind of shapes that forms in the market, and traders use these to anticipate future price. They use this as a roadmap to guess the road ahead, whether up or down. So there are three types of chart patterns. First is continuation patterns. This is a signal that the current trend will continue. So when you have an uptrend, you're looking for the corrective structure to have a continuation with the overall trend, which is up, and vice versa. Next is reversal. Indicates a trend is about to change direction. So we have the market going lower, and then it's retracing and then changing the direction to up. Next is bilateral. This is we are indicating the market can move in either direction. It can go up or it can go down. So this is an uncertain. So we'll talk about the first continuation patterns example. Here we have ascending and descending triangles. So I'll show you the example of how it looks like. This is the price squeezing up like a rising trend, and this is for descending. Next we will look at bullish and bearish flags. This is like a flagpole for bullish and bearish. It's going up. And next is bullish and bearish rectangle. This is, you can see, by a horizontal corrective structure. And last is bullish and bearish wedges. This is like a cone shaped corrective structure and for bearish structure. So reversal patterns example. First is head and shoulders. This is a common one, and that is for bearish, and inverse head and shoulders is for bullish. Next we have double top and bottom. This one has two tops and it has to break the neckline, and then you will get your entry, and this is double bottom. And we have triple bottom and triple top. This has three tops and this one has three bottoms. And then we talk about the psychology behind chart patterns. So chart patterns are more just than line. They are a visual story of the market emotions. Price can be dropping, sellers can be entering the market, the battle between sellers and buyers. So when you combine both of these, there will be the battle in your head, basically, as what they call as market psychology. So let's just see an example in head and shoulders pattern. So this is a clear uptrend where it has optimism, buyers are in control, and then here the market has reached a peak where euphoria and greed. And then here in this one, it never go higher, failed to push the price to a new high, and lastly the market drops below. Panic and fear takes over and downtrend begins. And then in this example last, we see how it all came up to be a downtrend. So don't be fooled by this, how the market plays with your psychology. So the common mistakes to avoid is, think of yourself as a new beginner trader looking at few things to achieve in these chart patterns. So you have this first mistake, which is you need to know when to take a trade and when to not force a pattern, because a pattern, people may want to force some kind of patterns in any types of charts. So in this chart, for example, you can't force anything. So if you have to squint your eyes to see a pattern, it's not really there. Do not force it. There is no pattern here. This is just a sideways market. The next mistake that traders needs to avoid is acting too early, where you may think this is the perfect entry, perfect area to buy buying, and what you know next is not waiting for it to break out of the pattern. You risk having to take a trade which is in the losing side, where market tends to slide lower. And then the last mistake is actually a very crucial one, where this is ignoring the bigger picture. So everyone wants to look at the smaller picture, or it's looking at too big of a picture. Look this, for example, this is an uptrend and you see a head and shoulders pattern and you take a sell, and then the next thing you know, you forgot to zoom out and you see the market is in an overall uptrend, very strong uptrend, and you missed on looking at the bigger picture. You look too small, you get confused on where you stand. So final note is, you need to practice and practice. You as a trader have to train your eyes to look for this kind of patterns. The more you see, the faster you will be. Hope you have learned something from this video. Thank you so much for watching, and if you do feel this is helpful, please do like and subscribe, and I'll hope to see you in the next video. Thank you so much.